Dr. Copper has an economics doctorate. Jeff Snider, head of global research at Alhambra Partners, does not. Copper is saying that the economy is booming, or is it? Jeff, you wrote an article about this, and which is very interesting. Here, I looked back, and you wrote about copper in September of 2019, and didn't again broach the subject until September of 2020. And then you wrote about it again in November and again in December. So we're going to talk about, is the doctor in? That's the headline of the post at Alhambra Partners. It was posted on December 30th. Why the recent focus on copper, Jeff?
Because if we're interested in whether or not we're heading off into an inflationary acceleration, one of the key indications that will tell us that is Dr. Copper. As you point out, it has an economics PhD, though I didn't know that it was an economics PhD. I think I thought it had maybe a metallurgist or some more hard science PhD, but I suppose if graduated from an economics school, it's the same thing, right? No, the point, really, I mean, everybody, there's been a lot of talk over the last couple of months that yes, governments they're in danger of doing too much. The combination of, especially in the United States, the federal government spending, just helicoptering money to everybody, along with the Federal Reserve monetizing the debt and all these other things, it's going to lead us into 1970s style inflation at best, if not, some people say, Weimar Germany hyperinflation. And so if we're worried about those things, or if we even just want to check to see if there's any validity to any of the assumptions underlying them, then we might want to check copper as a starting point. And what you find is, especially over the last 6 months, copper actually has gone way up. So
yeah, well, way
now
up.
What?
No, you're downplaying it. It's of the 6 major base metals, which is aluminum, copper, lead, nickel, tin, and zinc, of course, copper. That cardinal metal, the ruddy metal, rose the most out of all of them. And in fact, from trough to peak, it rose 72% in 2020. That's a number that would make Bitcoin blush. Tesla is jealous of that sort of price appreciation. Copper, of those 6 metals that I mentioned, if you take a look at the average price in 2020 and you compare it to the average price in 2019, copper was the only one that rose. It only rose by like some 3% on average for the full year. But yes, an absolutely vertical, almost 45-degree angle rise in copper. Very unusual for that metal. And so you did some research, and you wanted to know whether or not maybe there are fundamental reasons. Gosh, who would ever think about that in a commodity market? Fundamental supply and demand reasons for copper's rise. But I think you raised it in your article. You said, well, because the rise started right in March 23rd, if I remember right. That was the U-turn. So people associate that rebound with the central bank action of the United States.
QE must be, right? And it's not, I think another important point too is that it's not just how quickly it's risen. I mean, that's the one, that's the thing, the factor that really grabs you. But now copper is at a multi-year high, and how that they love to say, oh, copper is the highest it's been in years. I mean, that seems like a significant increase. In fact, I think the last time copper was this high was what, 2012, 2013, somewhere around in there. I mean, we're talking about a major high here, or people who believe in technical analysis, a breakout. So, it turns around right when QE got going. It's at a multi-year high, and it's moving at a 45-degree descent. How can this not be anything other than this 1970 style inflation baseline, right? And Dr. Copper is telling you that, yes, central banks have finally unlocked the secret to inflation, and the federal government is going to do too much, right? And what else could it possibly be?
Supply. Is there maybe not enough?
We're forgetting about, right? I mean, it's really, you're forgetting about that there is, copper, like crude oil, there is a physical, real economy element to this stuff. It's not just money printing. It's not just potential investors seeking shelter from devalued currency. There is people who actually use this stuff in economic processes. And in fact, there are, significant supply issues to consider, as well as demand issues to consider. And on the supply side, I mean, look, when the entire global economy shut down earlier this year, so did copper mines. So did other things. There was a tremendous supply disruption in copper. And from what I gather from people who know these things, and I'm including you in this, Emil, because this is kind of your world here. Not only was there a tremendous supply disruption, because at that time in March and April, no one really knew how long these supply disruptions would last. There was a scramble. I mean, a real massive scramble, a hoarding process which took place because those that did have funding in place, and I'm talking about Chinese governments in particular, were able to say, look, we don't know when we're going to get our copper. The copper mines are shut down around the world. We need this stuff, so we're just going to start buying anything we can get our hands on, and we'll just hoard it for as long as we need to hoard it. So you have you have supply disruption, you have hoarding, you have stocking and hidden inventory that doesn't show up on the exchanges or anyplace else. And it's the recipe for a 45-degree ascent to multi-year highs. It's essentially a short squeeze.
That's right. So I took a look at some reports from 4 research teams at banks. And the average forecast for 2020 was that there would be a fall, about 2.5%, 2.4% reduction in copper mine supply year over year. But the range, we're still not over. The data's still coming in. Yeah, go on.
Right. No, I was just going to say that sounds like it's not much, right? 2%. Who big deal? No, copper supply doesn't usually fall at all. In fact, we need copper to grow at a substantial rate just to keep pace with demand. And so a 2% decline in supply is enormous. That's a major disruption in supply.
That's right. And we don't even really know if it'll be 2.4% because not all the data's come in yet.
Right.
We just finished the year. And the estimates actually range from negative 0.6% to negative 3.8%. So it could be even more than the 2.5% that, on average that we're thinking about. And you're right. It's not that even copper supply, there's not enough of it. These mines, to keep up with demand, you said, right? You got to keep up with demand. No, you got to keep up with supply. These mines exhaust themselves. They're not bottomless wells. And what we saw in some of these reports that we looked at was that for the next couple of years, till about 2023, there's supposed to be a surplus because the economy's not in great shape. But starting in 2024, 2026, everyone starts agreeing that we start falling into deficits, that there's simply not enough supply. And you mentioned a UBS report where by the end of the decade, it would be at an impossible deficit of like 10 million tons out of, 25.5 million tons.
Yeah, just a deficit so big. But that's the overriding point, that when people look at the copper supply situation today, everyone realizes without significant investment in exploration and production that we're going to be in chronic deficits for a very long time. And of course, we know that financial markets, especially commodity markets, are very much forward-looking and very much considering those kinds of situations. So we have the combined short-term outlook of the supply disruption and this hidden inventory that's been taken up, this hoarding that happened in the middle of this year. And then you have a longer-term outlook where supply looks pretty grim. And it looks like, hey, this is the key ingredients for copper to go up, regardless of what happens on the demand side or anything that has anything to do with currency or QE or anything like that.
It's that hoarding that's so interesting and unusual this year. We mentioned it a couple of times. The number one hoarder would be China, and they have a state reserve bureau that puts aside metals, oils, whatever is key to their economy, just like in the United States with the oil. And of course, as you would guess, it's a state secret, so no one really knows. But we could sort of work our way backwards into figuring out what the actual demand is by looking from the ground up, if you count all the widgets that are made out of copper, and then how much is being imported. And if the difference between the two, you might be able to guesstimate how much is being set aside for the future. And
or we
UBS,
just ballpark it, right? I mean, we're never going to have, no precise estimates. We just want to have an idea of what is it significant or insignificant.
So UBS, their economic bottom-up analysis suggested that China was consuming 5% more this year. But how much did what was the actual Chinese demand? Depends on who you ask, but between 8 and 16%. So the difference between the two is gigantic. Just to put that into perspective, it's 500,000 to 600,000 tons of copper may have been set aside for the future, maybe for reasons that we were talking about, lack of investment in copper mines, as inventory, and that's about 2 to 3% of world demand and about 4% of Chinese demand as kind of a bonus for just this year, right? So we're not saying that's sustainable activity. That's not natural. And maybe that's what's helping fuel the stock market. I'm confused. Stock market, Bitcoin, Tesla, copper, what's the difference?
Yeah, no, and not only that as copper production gets back closer to normal, which has been slow to do so far this year, we would expect those Chinese stores to go back into the inventory stream, which will actually maybe depress the price of the year ahead. In fact, I think that's one of the key takeaways from all of these commodity research outlets is that they actually expect copper prices to decline next year a little bit to maybe more significant, but it's not like this is hey, we've destroyed the dollar and copper is going to go to the moon. It's story this year has been mostly about the supply side and the supply squeeze in it. And it's been, hey, if you're a copper investor, it's been a great ride if you started being an investor back in March or April. Other than that, it's been a little more mixed.
And Jeff, I'm in the metals industry. You gave away my secret. A lot of people assume that I'm kind of, living on the beach and not doing anything. But yeah, okay, I'm in the metals industry. You gave it away. But you did an analysis. So I'm seeing metal reports every single day. I wake up, that's what I see in my dreams, in my nightmares. Jeff, congratulations. You did an analysis that I never see when it comes to metals and mining. Tell us a little bit about the Bureau of Labor Statistics data that you looked at and as a proxy for what the mining companies believe regarding this rally right now in copper, or more broadly, commodities.
Well, what would you expect if this was either a combination of the vaccine working and demand getting back to normal or even better than normal quickly, or if this was currency devaluation that's going to keep copper prices astronomically high for a very long period of time, whether your preferred scenario that gets copper up maybe into the $5 per pound or even better, back to where it was around 2011 at its peak, then you would expect copper miners to say, hell, we better get going here. We got to get busy. The price is the price, and we're gonna take advantage of it. We got to get ramping up production. But when we look at the labor statistics, at least domestically, and I think they're also the same in Europe and other places. Admittedly, those are not, it's not Chile where there's copper's coming out of the ground in big parts, but more generally speaking about a commodity super cycle predicated on whichever your favorite theme is, the miners and producers domestically in the U.S. and Europe are not acting like that. They believe that's the case. In fact, labor in the mining sector in the United States is down significantly. I'm not talking about just this year, but going back to what we call Eurodollar number 4 and the peak of the commodity prices then. I mean, logging and mining and logging jobs, mining and logging payrolls in the United States remain significantly depressed. In the peak in the employment sector of employment in those sectors goes all the way back to 2014. So if the American producers are thinking that commodity prices represent some game-changing shift toward whatever it might be that gets commodity prices way up into the stratosphere and keeps them there, they're curiously not acting on it like they believe that they need to get themselves going. They're not hiring, they're not investing, not doing all these other things, which you would expect them to do, given the fact that being in the commodity business for years now has really, really sucked. And so if you're thinking, hey, things are going to go back to being good again, you're going to jump all over that. You're going to strike while the iron's hot, and we're just not seeing it. And so it's more corroborating evidence that, what's going on in commodity prices is more about the supply side of it than anything else. Which, I mean, as a commodity producer, you're going to know what's going on the supply side. And if you think that's what's driving prices, then it's really not going to alter your behavior.
Well, dear audience, if you enjoyed this little divergence from what we usually talk about into metals, check out the end of the year podcast for Macro Voices with our mutual friend Eric Townsend. He was with Grant Williams and Ronnie Stofferle, and they talked about many different investments. Copper came up, gold, silver. They talked about commodities a good amount, metals especially. It was a good show. So if you're interested, check that out.